Guy. And since then, of course, we all pray at the Buffett and Munger Church. And since then, we get together twice a year, basically, someplace in the world. And we discuss some investments, we discuss our lives, we discuss world affairs. So, Guy, most of us in the call have read your book. I mean, for sure, they have received your book. I don't know if they have read it, but a few of them have read it probably. And also, some of us, the true fans, saw the 4.5-hour Warren show on Saturday. So to start this off, I'll ask you some questions, and then I'll open the floor for or the screen in this case for Q&A. So how is social distancing Zurich style?
Just to get a sense, so we got 41 people on the call. How many?
57 now.
Oh, okay. How many saw the Berkshire meeting? Do you know?
Well, we can do there's like a poll here. So if you go
just out of curiosity.
Yeah, let me see. One no.
In any case, just for fun. Meanwhile, I'll continue to answer your question. It's just interesting to know. But social distancing here in Zurich, I mean, I can't even remember how long it's been. I feel like the days and weeks just all kind of like melded into each other. I think it's been about 6 weeks. I mean, we went into it sometime in the middle of March, I guess. And Dante, I saw you in Boston. No, I didn't. Well, I saw the rest of the group in Boston. That was the end of February.
Yeah.
And it was never a very tight lockdown. I understand that in Italy, people weren't allowed to leave their buildings. And if they did, they had to show a form to show why they'd left their building. We never had that kind of lockdown. Yeah, I mean, look, personally, we have a very nice home here. It's not been any onerousness to be all here together. And now they're opening it up. So this week, beginning of this week, we could get haircuts again. Beginning of last week, we could go to certain garden centers. And next week, they're going to start with school. So, so that's lockdown in Zurich, Switzerland. Personally, there have been some things that I've quite liked. So I'm actually, Dante, grateful for the lack of travel. I've been able to cancel so many events that I really didn't need to be at in the first place. So that actually was a good thing. At the same time, you know, I worry about the future of the world. I worry about the future of our portfolio. I worry about all of those things. It's a very, very unsettling time. So I've been really happy to be with my family. I've been really happy to do all the reading I've been doing. Up to about a week ago, I was doing quite a lot of sport. But what's happening to the world economy and the upheaval is really rather shocking.
Yeah, it is.
How's that as an answer?
Yeah. So I guess you're also concerned about second waves of the pandemic and the impact on the continuing impact on the economy, the markets.
I mean, I think that my experience of panics is that, you know, I mean, first of all, going into this, and this I guess gets more interesting for this group, I said to myself, hey, I survived the global financial crisis of 2008-9. That's the last time I'll ever see anything like that in my lifetime. Now I've come to understand that we have to expect that once in a lifetime crises happen every 10 years.
Yeah.
So that was a shock to me, and that was difficult for me going into it. And I think that about a week before the markets tanked, I started to understand that this thing was growing exponentially. And I was sending WhatsApp messages to my family telling them to shelter in place. But I didn't expect such a huge impact on the markets. I didn't make the connection between what was going on with the virus and people having to shelter in their homes and the impact in the markets. And so, and then even then, I was constantly saying to myself, certainly be fearful for my parents, for example, who are in their 80s, but I didn't expect such a strong impact on the economy or on the markets. And I've constantly underestimated that all the way through. And I think that in our world, as investors and business people, we all have an optimistic orientation. We know that it's sort of, if you're optimistic, you're more likely to be successful in life. So I've had enormous optimism about this whole thing all the way through. And until about 10 days ago, I was convinced this would be a short V-shaped thing. And it's only in the last week that I've come to see that it is unlikely to be a V-shaped thing. And there are just things that are happening that are just so unusual. I mean, they're talking about possibly closing Gatwick Airport, the second airport of the UK. They're talking, that would be like closing LaGuardia Airport in New York City, because there's just there won't be enough demand. I'm curious to see next week young children go back to school. And I think that I don't know how much economic activity comes back, but certainly to read the newspapers, it seems like we've, destroyed, we've committed economic suicide in order to stop the virus, basically.
Yeah.
But, second waves, who knows? We really don't know. I still want to believe that this thing will go away as quickly as it came. But I've certainly been wrong all the way up to now. And I would tell you that the Berkshire Hathaway meeting on Saturday did not provide me with any greater comfort. I think we were all shocked to see that Warren in the month of April had not bought anything. In fact, he'd sold shares. He was a net seller of shares. It was kind of shocking. And it was also shocking to see him take a whole hour to talk to us about the history of the stock market declines of the 1930s, and basically sort of setting our expectations that we could have 20 years of horrible returns, if you like, and horrible economy. And so that was, I think many of the people that we know were kind of shocked by it. And I came out of it thinking, wow, maybe I should be holding more cash.
Yeah. So let's not get too gloomy. So let me ask you some Berkshire related questions. So you hold a fair amount of Berkshire shares in your portfolio.
Yeah.
So do you think about it as a long-term holding, a proxy of cash? What is your case for holding Berkshire for, let's say, the next 10 years?
We have various friends in common that I certainly won't name, but I think that in a time like this, to have a lot of Berkshire Hathaway, it feels great, even if it's down 20 or so percent, or whatever amount it's down. This is such a big crisis. Who thought, Dante, that in our lifetime, we would have not just the global financial crisis of 2008-9, but this pandemic? And, there was an article somewhere that even the moat of Berkshire Hathaway is being breached by this. I mean, I think that part of the shock that Warren Buffett has is that he never believed that he would have See's Candies not selling candies. He never believed that he would have many of his businesses just not producing. He never believed that Precision Cast Parts would have half of its sales taken to close to zero because it's all to the airline manufacturers. Yeah, I can't remember your question. It was a good question, but it just went out of my head.
Yeah, I mean, you hold shares, and so what's the case for, if you tell somebody you have to hold this for 10 years, Warren is not going to be along for that long, he's 90 already.
Oh,
let's be realistic.
Yeah, I mean, look, I kind of think of the portfolio that I hold. A lot of people some people make fun of me for it, but at least half or more of the portfolio is in companies that will even survive this financial crisis or this pandemic without any problems at all. in the case of Berkshire Hathaway, yeah, you got to assume that the day you buy it, Warren Buffett is no longer around. And but the businesses that are in there, even if they don't own Amazon and they don't own Salesforce.com and various other cloud and other businesses that are thriving in this time, they have plenty of great businesses that will do absolutely fine, and we can be very confident that the people at the top allocating capital, even after Warren Buffett is gone, are going to do a decent job of it. And so what's the likelihood that it turns out a return that is somewhat better than the S&P? It's a very, very good chance. And you have to put the money somewhere. I would say that more and more I realize that, like, I don't lose sleep over my Berkshire Hathaway position. And I in a certain way, actually, I'm coming to the, I mean, Warren Buffett said that he can't guarantee that he'll exceed the S&P over the next 10 years. If I'm not mistaken, from the annual meeting this time around. But, you know, would you rather be in the S&P and have maybe some more volatility or have more worries? Or would you rather be in Berkshire Hathaway and sleep better at night and have less worries, or know that it's counter-cyclical? That when the right moment comes, they'll be able to deploy a lot of capital. But there was certainly, I mean, I don't know if Warren was aware of quite how downbeat he was.
Yeah, yeah.
You know, let's not forget that it's a new medium for him. He's never done a TV, like a, whatever you want to call it, a live stream like that before. But the fact of the matter is, perhaps that's the way he is. He was downbeat. But that doesn't mean that the company is not going to have a great outcome over the next 20 years. I think it'll have a very good outcome.
Yeah. You talk about this in your book, about your, you know, becoming a value investor or learning to become a better value investor. So if you have to summarize the main lessons from Buffett, Munger, and of course you had lunch with them, not with them, but with Warren especially. So for the group, how would you?
Yeah. You know, before I go there, I'm certainly happy to answer that, but I'll just give a couple of, both from the observation of Buffett and also from my observation of myself in this crisis. I mean, you know, Warren sold the airlines. He bought them for about $8 billion. I think that the prices of the shares, I haven't looked at it closely, approximately doubled on him. Then this crisis hit, and he sold them for a discount. I'm not sure if those numbers are exactly correct, but you know, one could have said, look, Warren, it's $8 billion that you invested. Yeah, so you're going to have a tough time for the next 5 or 6 years, but probably there'll be great opportunities to fund them, and you'll come out of the other side of it. And, you know, a long time horizon is what Berkshire's all about. But I think that he just went to sleep one night and he just said, I don't want the mental energy of owning this. And so one of the things that I learned in this crisis is that it's really important to size your positions and have cash levels that make you feel good about your life on a daily basis. And, you know, so it's okay if somebody is owning, you know, if the crisis comes and you realize that you've got too much in equities, it's okay to sell it down. You know, don't beat yourself up over it. It's something that I've learned from this. So, you know, I went into the crisis with 4 or 5% cash. I'm now at 10% cash. And in another couple of weeks, it'll be probably 20% cash. And I'm not saying that that's the best position from a pure return standpoint, but that's just what's going to make me very comfortable. And it might even go to 30% cash. And actually feeling comfortable in that way and being prepared for a world in which everything goes to hell in a handbasket is a good feeling for me. So, and I didn't see that as clearly before. And I think that's part of what Warren's doing. He feels great. He doesn't like what's happening to the world, but he feels great right now with $140 or so billion in his pocket, ready to go. I mean, the lessons from the lessons from the launch, that, I just want to go back to that because it's something that I've been learning, is this idea of just position sizing. It's really, really important to get the position sizing right. And that's, that is in relation to how much cash you have, how wealthy you are, what other investments you have. And, you can make mistakes on the downside, but you can also make mistakes by having positions too big, basically. And when you see that they're not the right size, then change them. The stock doesn't know that you own it. It's okay to do it. Yeah. So that's a huge lesson for me. Lessons from the lunch. I don't know, nothing, you have to forgive me, Dante, it's 10 o'clock at night.
I know, yeah.
That's me up.
Yeah.
But what we could do, Dante, is that, for the seminar that I did before the Berkshire meeting, I shared some personal photos from the launch. I could bring them up and I could show them to the group if you like. I don't know if you want to do that.
Yeah, while we talk, yeah. So I have another question here. So we all know that failure is a better teacher than success.
Yeah, unfortunately.
Can you teach some of the lessons from bad investing experiences? Well, you had a big ordeal with this public company, Horsehead, along with Monish, right? And you took it all the way down.
Yeah, I mean, that is a great example of bad position sizing. I mean, there was not much. So I'm ready for you with the photographs. If you want me to share some of them, I'm happy to do it, just so you know.
You can share them while you speak, yeah.
Then I'll want to talk about it. So I'll answer this question, then we'll share.
I know, yeah.
Lessons from Horsehead. I mean, there are two big lessons. I had this sort of ideological.
If you can tell the group the background, yeah.
I pay close attention to what smart people in my life do, or I try to. And this Indian friend, Monish, had quite a very large position in this company, Horsehead Holding. I believe that he was either 5 or 10% of the company. And the more I studied the company, the more I felt like I could see that they were going to transform the economics of a particular part of the steel business. And there were many good things that were happening. It's just that they were building this plant. And the plant got delayed and delayed and delayed. And at a point where there was a sudden decline in the price of zinc, which is the primary product that they sell, it turned out that the plant that they were building was never going to be ready, and that they'd spent more money than they had. And suddenly, within a period of 3 or 4 months, they were going to do a bankruptcy filing. And so they ended up filing for bankruptcy for reasons that I'm still not fully understand, because there was a lot of asset value to back the company. They just had a short-term cash flow issue. But I had the experience of seeing a position that was 15% of my portfolio go to zero, which is by far and away the most difficult time, actually as difficult perhaps as the financial crisis. And, if in retrospect, 2 huge lessons. One was that it's quite possible if I'd have been closer to the management, then I would have maybe seen this coming. And I think it really taught me to disabuse myself of the idea that one shouldn't speak to management. That's just a really bad idea. It is important to speak to management. It's just important to get the timing right and to get the content of those conversations right. And the other huge lesson for me is position sizing. I mean, I had, even before the financial crisis, I had some significant losses in my portfolio. It didn't matter. I'd sized the positions right. And I have an ownership position in a credit rating agency in India that is down probably 50% on me. But that's fine, because I made it a small position, and I plan to own it for a very long time, and I hope the company will get a lot better. but because it's the right size, it's absolutely fine. So, but those two lessons have taken me a long time to learn. I've been doing this 20 years, and I still don't understand how to size positions, you know?
Yeah, but you also took this all the way to bankruptcy court. And was it a good
Well,
use of your time? Yeah.
So that part of the part of that story is that, you know, different investors have different personalities, and so when this thing went to zero, and I didn't believe it should have gone to zero at all. I feel like the management, they gave up at some point trying to save the company for the shareholders, and started cooperating very actively with the creditors without letting the shareholders know that they were doing that. I felt like this was outrageous. And, you know, some people have the personality that they say, well, I lost that bet, I'm going to move on.
Yeah.
And I felt like I couldn't do that. And so I fought the bankruptcy without the real resources, because the real, at that point, the company owed $200 million. And if I would have had $200 million, I could have paid off the creditors and taken control of the company. But I didn't have that $200 million, but I still believe the company was worth more than what the creditors were giving it credit for. And so I fought that at the bankruptcy court. So for what it's worth, bankruptcy court takes a company that is filed for protection from its creditors and has the power to award the company, for example, to the creditors in payment of its debts. And I came along to the judge basically and said, you can't do that. The company has value for the creditor, for the equity holders. And actually in the final, I mean, we still lost the company, but actually the valuation that the judge came to did have some value for the equity holders, interestingly enough. I mean, what I would say is that I learned an enormous amount through that. And Dante, my personality is that I had to do that. I could not have done it any other way. And I don't regret doing that at all. And, you know, and I'm obviously I would have preferred an outcome where we would have won in the final trial. But I still would have done it, even if I knew up front that we wouldn't win. I felt, and you know why? Because I felt like my reputation was on the line. Many people had followed me in there, and I had to fight. I had to do everything I could. I could live with myself if I knew I had done everything I possibly could to try and save the equity interest. And that's what I did. I can look at anybody in the eye and say that I did that. And
Well, you can tell I know most of the answers, but so you want to show us the pictures now?
Oh yeah, sure. So you need to give me the screen share.
You can do it yourself, I think. Screen share screen.
Let's see. Hold on a second. Share screen. Here we go. Desktop one. Oh, I need to open my system preferences. Is it doing anything?
No.
Yeah, go through the motions of the system preferences. It takes a second.
Yes, so system preferences. And then, do you know where it is? Do you know which part of system preferences? I'm on an Apple here.
Privacy. It should come up.
Let's see. Privacy, grant access. Okay, let's see. Oh, there we go. Okay.
It'll ask you to restart Zoom, but
later. Okay. Thank you. Okay, so try again.
Yeah, we can see them now.
It wants to record. You can see it. Okay. So there we go. I mean, this. I don't know how many. Have you seen these, Dante? You've probably seen them.
Yeah, I've seen them. Yeah.
So it's just funny because I don't think these are in the public domain, but so that's the room at Smith and Walensky's, and you can see Warren Buffett over there and Monish's daughters left and right, and you can see that I'm having a whale of a time, and that's my wife, and this is the back of Monish's wife, Harina, and Monish is out of the picture, but for what it's worth, I had a cold at the time. I was a little sick because I was so nervous about meeting him and I so wanted him to like us. And you can see the Diet Cokes everywhere. In retrospect, I wish I'd ordered a really expensive wine. Well, not an expensive wine, but a nice wine in any case. And there we have, Monish's daughters look so young. They're now fully grown. Yeah. It's amazing. Yeah. And I don't remember what's going on there. But and now they have on the walls there, I'm sure you've been there, Dante, there's some plaques with, so what else did I, well, that was a little room, and you can see that Smith & Wollensky's in New York. And people in the tables outside knew that we were having that lunch. They were kind of enjoying watching us from a distance. But, and the time went by so fast. Yeah. It was kind of frustrating how fast it went by. What else did I put up here? So then about the following year, we got invited to Warren's office and he gave us a tour. And so we got these photographs. So this is in his office. There's a photograph of his dad. Interestingly enough, his wife had died, but no photograph of his wife. And there was nothing in the too hard pile. So I sort of said, hey, Warren, you got to put something in the too hard pile. But not a very large office. And apparently, these blinds are always down. He just never looks out. He has no interest. And pretty straightforward office. I mean, not much else to look at. And this is kind of like in the lobby of his office. So I can't remember exactly how it goes there. I think Debbie's office is, can you see my mouse? Yeah. I think Debbie's office is somewhere here, but this is kind of like a reception area. It was interesting to see us, nobody gets to see the wizard, not nobody, not know-how. So he kind of gets a lot of visitors, or people try and visit him, and he tries to sort of like get them away from him. And there's Monish on that visit, and we had this sign made. So this is apparently is one of the big football teams. They have Play Like a Champ today in their changing rooms, and he had this sign made. So of course we went and got the same sign made. And that's us at the Berkshire meeting. If I would have known, actually, Dante, I should have pulled up some photos with you. There's us with Becky Quick. Yeah. She was very nice to us at the first meeting after we had the lunch, but then she kind of, well, she had other bigger fish to fry, I guess. Yeah. That's Monish and Laurie at the Berkshire. That's my wife, and that's the four of us. That's probably my favorite photograph, actually. Yeah. And there's Debbie Basanik. So,
Warren Secretary.
Yeah, that's Debbie's secret sauce. I mean, before the launch with Buffett, I really didn't know Monish very well. This was on a trip to India where we visited one of the Dakshana dorms. Yeah. And this is somebody else that I got to know through Debbie Basanik. Her name is Gillian Segal. She wrote a book called Getting There. And so I kind of, and she's actually she's really friendly with both Warren and Charlie and Bill Gates. It's kind of crazy. Yeah. And Laura Rittenhouse is another person I got to know. Yeah. This was Phil Town. Yeah.
That was you.
I don't know.
Yeah.
Oh, that was, sorry for the noise, but.
Who's that?
That was Rose Del Rios, who was the former treasurer of the United States. Oh. And this is at the Buffett brunch. So this is at this sort of like after the Berkshire meeting. Yeah. He invites some people. So I don't know. Why did I show this? There's an author. Forgive me for the.
Shut up. Yeah. So
anyway, there you go. Just a few photographs.
You're stalking Tim Cook there. Yeah. So let's switch gears. Let's talk a bit about the economy. So of course you have a degree in economics, and so how do you judge the sustainability of the QE infinity? So I don't know if you want to reflect on that and walking us through the economic implications that you see.
So first of all, let's start with QE, because that's perhaps the easiest thing. And here's the analogy that I have that is not a perfect analogy, but I want to share it with you because I think it kind of helps me to think about it. So, you know, we have the economy and we have the circular flow of money or liquidity through the economy. So we could, if we imagine for a second that the economy is a house and the circular, there's the liquidity, the money that makes everything work is like water flowing in pipes through the house. And we just imagine for a second that all the taps are on and we have a system for circulating the water back to the top of the house. And then it flows through all sorts of different pipes into sinks in the bathroom, into the shower, and what we need for a happy house in this special world is that the water's flowing nicely, and in some sinks it's half up, and in other sinks it's 1/4, and that's kind of like liquidity flowing through the system, if you like. And then there's something that takes the water from the top and recycles it back, from the bottom and recycles it back to the top. Now, you know, something that we've never really seen before, half the taps in the house are switched off. That's effectively what the lockdown does. It stops activity left, right, and center. And suddenly baths are emptying out, basins are emptying out. And so the Federal Reserve is running around with buckets of water trying to fill the different tubs. And now somebody comes and says, oh, the Federal Reserve shouldn't be doing that. I think my point is that the Federal Reserve is pushing liquidity into places where liquidity is dried up. For various reasons, people can't buy high yield bonds, and the Federal Reserve, unlike the 1929 crash where they said, oh, well, that's the private market, we are just going to sit here and watch. The Federal Reserve is coming and doing absolutely the right thing, and that's what Warren said when he said that Powell absolutely is as important as Ben Bernanke is. He took, they're very tough decisions to make, but they were the right things to do. And then so you have these currency hawks, and there are people in Germany who are these currency hawks who say, oh my God, this is unacceptable. The federal balance sheet has blown up. We're going to have inflation. We don't have sound money anymore. So we don't know what the outcome is, but we do know that if the Federal Reserve hadn't opened the floodgates, run around with buckets of water through the house and filled up things that were drying up, we would have caused a terrible economic crisis. And so that was absolutely the right thing to do. And we don't know what the consequences are, but we absolutely know that if the Fed had not done that, it would be disastrous. And I actually think that it's very likely that the Federal Reserve will figure out, and other central banks will figure out, how to withdraw the liquidity once the economy restarts. So I actually, you know, the fact that the Federal Reserve balance sheet has expanded by so much is a very positive sign, actually. It shows that we have policymakers who have learned from previous financial crises, who understand how to keep the economic machine going and are doing the right thing. So there I don't have an issue at all. Okay. And then, you know, so if you go to the real economy, I mean, it's shocking. It's absolutely shocking to see 25 million unemployed. You know, that is just a scary, scary number. And who knows what the consequences of it are. And if you look at, you know, I mean, my little office, Dante, and, you know, the few mailings that we do, and of course, a lot of that got slowed down or stopped. And now, you know, we want to continue with the mailings, but, you know, the post office doesn't want to accept post that is going to countries outside of Europe. We don't have, you know, the things that we want to mail out, we don't have. So our little office supply chains are disrupted. And if our supply chains are disrupted, I can't even start to think what supply chains look like in the broader economy. So the disruption there is enormous. And I was already 3 or 4 weeks ago sort of saying, look, we need to, this is going to, the damage from the economic shutdown is going to be greater than the damage from the loss of life because of the virus. And so I think that, I mean, when I look at it, I just say there is a very high likelihood that we have an enormous recession, huge, huge recession. But having said that, I think that there is a part of this story that the newspapers and the financial press want to scare us more. Well, it's not they want to scare us more, it's that they want to sell newspapers. And so the headlines scream. and we're in a fearful state. And so it's not going to be as bad as those headlines say. The reason why is that, again, government spending is going to stabilize. It's not going to replace the spending that is lost. But government, it's in times of recession, government stabilize the economy. And Warren Buffett said that the net worth of the United States is around, he put it, I think, at $100 trillion. And, for the country to spend in this crisis $5 trillion to help it get through is something that the country can afford to do. So, but having said that, it would have been ideal for us to go through this crisis somehow without shutting our global economies down. And I think that it's still not clear, Dante, whether, it may be that we don't get a second wave, or the second wave is very attenuated and the economy actually roars back pretty quickly. We can't rule that out. It's very possible that I wouldn't rule it out.
Yeah, now it's also an election year. So how do you assess the impact of Trump winning or losing?
So there are a lot of people, amazingly enough, it's not clear that it's not clear to me that he's going to lose because, I'm not the average American elector. And there are some people that I respect very highly who think that he's a great president, or what they would say is the argument is he's a terrible person, but he's actually, when you look at many of his actions, he's not such a terrible president. I think that, one of the things that I'm reminded of in watching the Berkshire meeting that I take away from it is that what we have to do as investors and business people is not, we don't have to be for Trump or against Trump, like him or dislike him. We just have to observe. And the fact of the matter is, none of us knows who's going to be reelected. He may be reelected, he may not be reelected. He may be pumping up the stock market right now in order to improve his chances of reelection. He may have given the directive out to every single person who has any influence to say these markets have to stay strong, at least until I get elected and reelected, and then you can let them go. That is just one great big unknown, a huge unknown, and that is what makes me. I will certainly feel very happy to have around 20% of cash in my portfolio. So, yeah. And the real answer to that as investors, so it's not so much, do I know what's going to happen? Of course I don't. But given the uncertainty, what's the level of cash that I want to hold to be ready for whatever comes?
Yeah, have some somewhat related question to this that I got from somebody on the call. Which main assumptions for a value investor have you changed with COVID? What are you adjusting on your models?
Yeah. So very much on the portfolio management side, we talked about that, how, the extreme importance of getting position sizing right, because if the position is the right size, it's not going to affect me too much if there's sudden extreme drawdowns. It's a great question. I have to say that I'm still shocked at the idea that the airline industry is going to take at least 3 years or more to come back. I still can't quite believe that, because I just can't quite believe it. But I think that so that's one, that's an adjustment that I'm still making. The other adjustment that I think is taking me so long, I've been, Dante, I just bought shares of the products, of the cloud computing products that I use. So, Dropbox, I use a lot. Salesforce, we use in our business. The returns in those companies would have been so great. So I've been aware of the cloud and of cloud computing as a product that I use, but I haven't invested in them. And what we see now is that they are far more central to our operating system, our economic operating system, than so many other companies that maybe were central to our economic operating system 20 or 30 years ago. So it's not maybe an update to my models, but the economic realities of which businesses are driving the world forward has changed. And I think it's taken me, because I've learned so much from Warren Buffett, but I've kind of discarded those ideas as investable ideas, and that is a great shame. So, I've been spending time in the last few weeks researching cloud computing companies like Salesforce, in addition to Amazon, Google, and some other ones that probably I hadn't heard of until I started researching them. I regret not owning them. I wonder if they're cheap enough now, but I'm certainly going to be paying a lot more and closer attention to them.
Yeah, I think, most of what you're saying is like consensus, I think. Not reflected on the market, but because if I ask you what sectors will be the winners after this crisis, which one will come out stronger? Everybody knows that the airlines for a few years are going to be down pretty bad, and the restaurants and all, hospitality. But is there something that somebody else is not looking at, that maybe we as value investors, we like to look where nobody else is looking? Yeah. Have you think about that?
When you figure that out, tell me, Dante. It was really shocking to see that Warren had not bought anything. And in a certain way that has led a lot of people to believe that, the other shoe is not yet dropped.
But not even that or thought. And they have this discretionary fund. I guess they manage like a 10 billion or so, and they haven't done nothing either. So that's also remarkable.
So no, I don't have anything
nothing to add.
Hugely insightful to share. I would say this, and this is not, so having been an investor, a professional investor through the financial crisis of 2008-9, there are my experience of that crisis sort of colors this one. And at the end of the day, that crisis lasted about 6 months, and then it was in a certain way over. And the world can change so quickly, and one's view of the world can change so quickly, and we don't even realize that we're becoming overly focused on some things that once the crisis is over will be done. And these people who write newspaper articles saying the world has changed forever, or people will never visit a restaurant for another 3 years, and we're going to have rules on social distancing. It's possible that we actually solve, either we get a vaccine or we solve those problems very quickly. Maybe it may be that they managed to prove that actually the only kinds of events where the virus is spread are certain kinds of social events where people get very close to each other. But if you're walking through an airport terminal, if you're sitting on an airplane, there are many, and I've no doubt that Boeing and Airbus are figuring out right now how to disease-proof their airplanes. And it may be that, flying comes back, maybe not right away, but quite quickly. I'm still astounded that, think of 9/11, the day of 9/11. I remember saying to myself, who will ever fly in a plane ever again? There was this feeling the world has changed forever. The world had not changed at all. And part of what the lockdown has done is that it has stopped innovation. And if we were to, what I believe that the governments should do is they should just say, look, we'll protect the hospital beds. As long as there are hospital beds available, it's your decision whether you go out or not. And, you're taking a risk, but it's up to you. And once businesses get the chance to innovate and experiment and figure stuff out, they're going to figure stuff out. We're going to find a way to continue with our way of life without, with the virus. And that may bring things back to normal far quicker. So it's hard to think through all of that. And I think that that's part of what Warren was saying at the meeting, he was just saying, look, I don't know yet. I don't understand. It's not clear to me. And if it's not clear, I don't have to do anything, basically.
Yeah. I got another easy question for you here from one of the attendants. This is about China, and they're trying to, of course, get rid of the dollar as a reserve currency for the world. I don't know. To you, I guess you don't, but how do you assess that in terms of China and the geopolitics of China and the US, locking horns, and, there are so many things that are happening there.
So, we both revere Charlie Munger, and
Yeah.
one of his statements is that the United States and China have to learn to get along. There's no other option. And while that is true, I have to say that, I am not a Trump supporter, I promise you, but I happen to believe that China covered up the origins of the virus. I think that I have plenty of evidence that shows that I've read. There's plenty of evidence that shows at minimum they covered it up, and at worst, it originated in a lab. We can't prove it. And so, we cannot have a world in which any country can engage in experiments with viruses that could then come and impact us. So I think the world has a big issue with some of the work that was going on in China around viruses. I think that if I understand from reports that I've read, there were real issues in getting personal protection equipment, PPE, from factories in China. And I've read stories that say that China was not playing fair in a certain way. They were kind of saying, we'll only supply these things to you if you behave in a certain way. And I think that has revealed to people how much we were relying on China. And so that is very, very likely to change. I don't think that the dollar is going to lose its reserve status anytime soon, because you have to be, in order to have reserve status for your currency, you have to treat people fairly, and you have to have a system that people trust. And I don't think that people trust China in the same way. So I don't think there's any danger of China becoming the global hegemon where, the United Nations, instead of things being decided at United Nations, they're decided somewhere in China. But it's certainly part of the story of this crisis is in a certain way seeing China flex its muscles.
Yeah.
And that's just part of the story, isn't it?
Yeah, it is. So another macro question. This is about gold. We are about investors, so I guess how would you explain what's our take on gold as a safe haven?
It's shiny and it's very nice to look at. I've never owned gold, and so for the person who's asking the question, this is straight from Warren Buffett's mouth. I'm almost repeating word for word. Is that the thing that makes us rich? So if we look at any list of rich people in the world, I don't think there's anybody who's on that list because they owned gold, because they bought and sold gold. It's not what creates wealth. And as Warren says, the gold just sits there and you can look at it, but it's not producing stuff. The people who are at the top of the Forbes lists or the rich people's lists, by and large, are people who were in great businesses for long periods of time. So in the United States, I think of people like the Walton family who owned Walmart, or I think of the Kroc family who owned McDonald's, or you think of the Buffett family who owned Berkshire Hathaway. And so you want to have the vast majority of your savings in, I think, productive businesses that can grow long-term the way Walmart and McDonald's and others have and did. And then, the question is, how do you hold cash? What ways do you do it? I mean, Warren Buffett, he was very clear. He said, they won't own commercial paper even. They buy treasury notes, T-bills, obligations of the US government. Some people say, oh, I don't trust the US government, I want gold. But the price of gold fluctuates and you have to pay tax on the capital gains if you have them. But look, Dante, gold is a way of holding cash, you know? And if you want to hold gold, I mean, it's a lot of work basically, because you're not expecting a return on it. So, and if you're looking for protection from inflation, I think there are other better ways to get protection from inflation.
Yeah. So we are getting closer to 4 p.m. I have a few more questions here. I don't know, maybe we can keep going. Maybe some people, if they have something else to do, they can disconnect. So maybe we can do some more, I mean, some quicker or shorter answers. So when you are analyzing and making an investment decision, do you rely on the opinion of analysts, or do you rely on your own work and opinion?
Yeah. So I think that the way I used to be, Dante, is that I was very suspicious of anyone who wasn't me and who wasn't somebody that I respected. And the analogy that I've used in terms of either using research or talking to management is, you know, using a chainsaw. A chainsaw is a very dangerous instrument. You easily cut off your arm or a leg with a chainsaw without thinking too much. And so, but, you know, my reaction in the past was, oh, therefore, I should never touch a chainsaw. But if I'm in the forest and I need to cut down a tree, just take out my penknife, to not use the chainsaw is ridiculous. And it's a dangerous tool, but you should use it. So I think that all of these things, talking to management, talking to analysts, reading analyst reports, are in a certain way dangerous tools, because they have probably an axe to grind. They're trying to convince us to do something.
Yeah.
But like the chainsaw, that doesn't mean we don't look at it. We read the instructions, we understand the dangers, and then we use it. Of course we use it. We need all the help that we can get. I think the key is not to speak to management first and take what they say as gospel truth.
Yeah.
Not to listen to the analyst first, but to first of all learn as much as one can about the company, and then speak to the analyst, then speak to the management. So I think that, you know, all of these things, the answer is you have to acquire as much information as you can, and you have to be intelligent about it. And, you know, just going to Horsehide, Dante, you know, I regret never visiting the company in their plant, because I think that if I'd visited their plant, I would have talked to some of the people. I would have maybe met somebody in the cafe. I would have exchanged business cards. I would have asked questions. I may have picked something up.
Yeah.
And so, yeah, you want to take information. Actually, something else that I've learned, I believe, is that I think that I've been far too mistrustful of my own instincts. And, you know, that's just, I've sort of like, if Warren Buffett's not thinking the thought, it can't be right. And if I'm thinking it, then, and Warren Buffett isn't thinking it, then I must be wrong type of deal. And, you know, I think that I would be a better investor if I was able to give proper attention to those instincts. And that doesn't mean that they should rule me, but they shouldn't be completely ignored either. And that's the same with things like talking to management or analysts.
Yeah.
Yeah.
So how do you source for investment ideas? Where do the ideas come from? How does the process work?
So you know, Warren Buffett, the way he answers a question like that is he says, well, I just start at the A's. Yeah. And so just for everybody's benefit, that is a way of not answering the question. But I think that the thing is, we have to use all of our intelligence and all of our abilities and all of the particular things that we have in our lives to move forward with that project of coming across the very best possible investment ideas. And I'm reminded in either the first or the second Gulf War, this famous general Norman Schwarzkopf was being asked by a journalist, you know, which way are you going into Iraq. And Norman Schwarzkopf answered the journalist by saying, let me tell you, we're going underneath, we're going around, we're going over. Every way you can think of us going into Iraq, we're going in that way. And I think that, when it comes to investing, any potential source of an idea is potentially a good source. And somebody who is intent on becoming better should not rule out any of them, whether that's value line, talking to your friends, attending the Berkshire meeting. It's all part of that search. And so what do I do is perhaps more interesting. I try to read the letters of other managers and try and understand and see what's going on. I just received the letter of a guy called Scott Miller from Greenhaven Asset Management.
Yeah, pretty good.
In it, he described, he's a lovely guy. In it, he describes 3 small companies, and I'm going to go and read up on them and try and understand. In another, I discovered that Mike Burry is one of my investors. Used to work at a company called GameStop, and Mike Burry, the famous guy from the movie The Big Short, is he's a 5% shareholder of GameStop. So there's something going on at GameStop that I want to go and look at and pay attention to. So at the same time, when I was taking a shower this morning, I was thinking to myself, well, when I have 20% cash, that'll be $40 million in my fund. Because, by the way, Dante, I'm no longer at $250 million. I'm at 200 million, just to be clear. A little more, but that's life in a big city. That's all right. And I was asking myself, what company could I find which have maybe $100 billion worth of debt that is not, because they're stressed, is trading at 50% of the value of the face value of the debt, where I could maybe acquire control of the company 50% of the face value. So I had that thought in the shower, and I said to myself, why don't I pull together a screen on Bloomberg in this case to see what comes up? So I'm going to do a search for companies with approximately $100 million worth of debt and just see what comes up. And so I'm looking at that. But something else that I'm doing is, when I do those screens, I'll get 5 candidates that I'll look at. Most likely, every candidate's going to be a piece of shit. Excuse my language. But I'll write to the managers of those companies anyway. I'll send them a copy of my book and a copy of the annual report. So you can see that I'm finding it's the same as Norman Schwarzkopf. Keep working as a line of attack until you see a better way to do it, and I'm trying to improve. Yeah,
so how do you handle, or avoid information overload? I mean, there's a lot of publications and books and blogs and, so there's a lot of information. How do you manage that? Your intake of information?
So in all honesty, first of all, the easy and fun answer to give you is not very well, but I'm seeking to improve. And I think that we have to, again, there's no substitute for approaching the task with as much intelligence as one can. So, I've started experimenting with Twitter as a research tool, because you can connect to all sorts of people via Twitter. And I see some economist, some Helsinki economist who's writing some things. So I go and read what he has to write, and it grabbed my attention. Until I finally figured out I can classify him as a kind of an economic commentator, like the Boom, Doom, and Gloom report, the guy in Hong Kong. So, one needs to classify one's sources and ways of doing research until you find what is most useful and what is not. And so, if there's an industry that I'm interested in, funny enough, I got a book on Southwest Airlines, which finally was on, and I was like, oh great, I'll finally learn more about Southwest Airlines, even though it's not really investable for me right now. Certainly, it was a really bad book. I mean, I was not impressed with it at all. I actually threw it away. But books are a great thing to read. I think, look, Dante, I'm not very action oriented, so in information overload, there's only a certain amount of time that you can research and read in a day. And at some point we have to make decisions. I mean, and yeah, I don't know if there's, what I would say in terms of structuring my days, Dante, is that I try to do sport first thing in the morning, because if I don't do it in the morning, I'll never do it. And then I try to get as much reading as I possibly can in, because once the phone calls start and responding to emails, that's a non-stop thing. And so today was a pretty good day. I read 3 or 4 hours. I had a big pile of papers on my desk. I was reading on some cloud computing companies. I had some, whenever I see something interesting, I print it out to read. I read Metro Bank's annual report, the UK bank. I read Salesforce annual report today. But, in a certain way, it's not so much information overload. It's just trying to learn enough that at some point I'll be able to make a good decision,
Yeah.
I don't know if that's...
I think Eric wants to ask a question. You can turn your mic on.
Great, thank you, Guy. Do you hear me?
Loud and clear.
Okay, looking after a country as ours, Peru, where we have a demographic bonus, something like the US in the 50s with baby boomers.
Yeah.
So we have a steady growth in the population and many kids growing and coming into the market, earning their salaries and spending for the next 20 or 30 years.
Yeah.
So in that sense, I want to take an approach to real estate as a asset class, which is the biggest one in the world, and how it take advantage of this situation in behalf of this hedge against inflation, which real estate has, as well as giving a cash flow for the next years, and the appreciation that brings an environment of baby boomers. So my question is, one, the asset class state in this environment, and number two is, instead of selling and going into cash, taking advantage of low interest rates. I've been involved in a few transactions when I get financing with a 30-year period for a balloon payment, and only interests for that period. So if I get these low interests and a balloon to 20 or 30 years, why not taking advantage of that instead of selling and going cash?
Yeah. So here's, first of all, realize I'm not a real estate investor. I don't have any particular insights, but here's what I would share with you that I feel I do know about real estate. So real estate is extraordinarily forgiving of bad management. So, you have some companies where if you don't manage the company right, you don't have any value left. And it's really nice to know that when you buy an apartment building or if you buy an office building, you can't be guaranteed it, but management is not that important an issue so long as the real estate is high quality and is in a good place. Real estate is also something that I think is really wonderful about real estate is it's so extraordinarily local. So, you really need to, there's nuances to what part of the building it is, what neighborhood, all of those things, which mean that a local investor can really do well with it and can apply insights that are not too hard. You don't have to be some big financial whiz kid to be able to do that. So those are a couple of things that I think make real estate a fantastic asset class, especially for individual investors. On the negative side, real estate is very, very capital intensive. So, you build a house, you buy a house or an apartment, you can put one family in it, you can put one tenant in it. You can't put multiple tenants into it. You can't increase the capacity. You have to buy a new apartment or you have to buy a new office in order to do extra rent. And so the capital intensivity is not positive. And that's why a lot of people want to fund the real estate purchases with credit and especially potentially at very, very low interest rates. If they're just giving money away, why not? Just one other thing that I've understood about real estate is that the real estate that you're going to buy for investment is probably very different to the real estate that you're going to buy to live in. So my best evaluation is that the running costs of a multifamily unit or a multi-office unit are far lower than owning different pieces of property. And so you want to pay careful attention to the operating characteristics of the properties that one buys. Lastly, one wants to pay attention to the replacement cost. What would it cost to replace this piece of real estate? But with, so that is an extraordinary asset class. And I actually think that, I would love to one day control or own an operating business. And if I don't succeed in doing it in some manufacturing or other kind of cloud, I don't know what, maybe I'd end up doing it in real estate. I think it's a very valid asset class. I just tell you that I recently bought a house in London and they were just giving money away. They were offering money at 2%. And I ended up buying it for all cash. And the interest rate would have been very low, but I was really, really happy to buy it for cash. At the end of the day, there's something really nice about knowing that you own something without having to talk to a bank, without anybody having any rights over you with that property is a really wonderful thing. And so I'm still extraordinarily wary of debt on the property. And my experience with Horsehead is that there are some banks that are very nice lenders, and there are some banks that will try and use tricks to get you. And, who knows, but there's something about owning it outright. So I got to where I am today without having ever having a mortgage. So did my father get to where he is without ever having a mortgage. And I kind of like the idea of never having to owe anybody anything. So I'd be very wary about even a balloon loan with 30 years.
And we have a meeting in your London house, Larry's work.
Oh, that would be nice once we finish it.
Where is it?
We haven't been able to go there.
Where's it located?
It's in Richmond, southwest of London.
I see. Okay, I have one question here from Diego. What is the best way to go from success to significance?
From success to significance. Well, that assumes that I've experienced both. I may not have. Have a wife that loves you. All the best questions are so hard to answer because they're actually philosophical. So how do you go from success to significance? I think that possibly the answer to that question, or a good answer to that question, is that, we need to find the ways to make the things that make us significant, that make us feel significant, without thinking about success. Those should maybe do the same things. I think there's somewhere in there, Dante, there's a comment about the inner scorecard that somebody could intelligently make. But maybe this is helpful for you. I think that, I had my children in my late 30s. I would have found it very hard, I think, to turn 40 without having had children, without being married. Being a single guy started to get old on me in my early 30s. It took me a while to find somebody, the right person for me to get married to. But I think that my children give me an enormous amount of significance. I think that I found it much easier to turn 50 having written a book that gave me an enormous amount of significance. So I think that the one last thing that I would say is that, so I'm doing this course online called The Science of Wellbeing. It's a course on Coursera. Anybody can do it. And she gives some really important things for what, they study now what makes people happy. And I try to go through every single day, especially, these are difficult times. We're in lockdown, a lot of uncertainty. Who knows how the world is going to unfold, how our lives are going to unfold. Maybe we lose somebody that we care about to the virus. And what she says is, you know, like try and get to the end of every day having done exercise, because that really has a huge impact on your happiness. Try and get to the end of every day having savored something. So what I realized, Dante, is that when I take photographs, I'm an amateur photographer, they're all lousy, but what I'm doing is I'm savoring. I'm taking a photograph as a memory to remember what it was that was nice and beautiful. Try to find a way to have a real connection to somebody in one way or another. And I think that, you know, if I kind of started waking up to this over the last year or two, that, you know, who knows, in all genuine seriousness, I don't know if I will have a great track record at the end of my life. But I can know that I was a great father, or that I was a great husband. And I would really like to get to the end of my life with a lot of people who care that I'm around. And I think that you get to do that by being genuinely helpful to people, finding ways to be a genuinely positive presence in their lives. And I think that that's probably a good way to gain significance. How'd I do? I don't know.
Superb, man. I think on that note, I don't have more questions here, and we can let you go to sleep now.
1 hour,
so thank
it's
you.
amazing. Wait. I didn't say something about Dante. So everyone,
keep going.
I would tell you that Dante is the most extraordinary Renaissance man that I know. Dante is numerate. Dante thinks analytically, but he also has a human side. He's an extraordinary friend. He's also, he also enjoys sport. And so, you know, Dante, you really have a broad range of things. And I get to see Dante relatively regularly. There are so many things that the group of us who see Dante envy in Dante. You have the most extraordinary family. And it's beautiful to see you gaining significance by sharing a resource who's a friend of yours, in this case, me, with some of your friends and some of your network. And that's really lovely. And it's a great thing that you're doing. And please, everyone, be a friend to me by appreciating Dante. He's a force for good in the world. He's certainly a force for good in Peru.
I'm blushing here, man. Gracias, muchas gracias, Guy.
No, oye, una cosa más.
En castellano,
pero en inglés.
En español.
So, en español. Entonces, el último Berkshire Hathaway, reunión de Berkshire Hathaway en Omaha, yo me decidió por la primera vez de correr el 5K, 5 kilómetros. Y Dante se decidió de hacerlo también. Y me dijo al empezar que va a quedar conmigo hasta el final. Pero desde el primer kilómetro, para mí 5 kilómetros es 45 minutos más o menos. Para Dante es 15, posiblemente 20 minutos. Entonces, después del primer kilómetro, Dante me dijo, oye, Guy, estoy aburrido con esta velocidad, te veo al final. Y eso fue. Pero, okay,
my friend.
Corre mucho mejor que yo.
Muchas gracias. Un fuerte abrazo.
Muchas gracias. Un buen fin del día.
Te veo
Hasta
pronto.
luego todos. Sí, chao.
Chao con todos. Gracias.
Ok, chao.